Hello, thank you for joining us today on the Profit Scale Thrive podcast, where we guide attorneys to overflowing profits, scaled growth, and thriving lives. I am your host, Kelly Brubaker. We have a secret though. This is a special place because we don't work with every law firm owner. We support the solo attorneys who are also single parents because we know the special challenges you face, and we know the business advice out there is not always practical for you and your firm. Each week, we will talk about things that will give you the insight you need to stop feeling overwhelmed, to gain back your confidence, and to finally enjoy your law firm and your life again. Welcome back. I'm so excited about today's topic. I want to revisit Profit First. So I know at the beginning of my podcast series, I invested a lot of time going through every single chapter of Profit First. And then I kind of set it aside on purpose because there were lots of other things that I wanted to talk about. But if you follow me in real time, we're approaching the end of September, which is a magical thing because it's the end of a calendar quarter. It's the end of the third quarter. And a couple things in the Profit First world are going to happen on September 30th / October 1st. We're going to do two things. We're going to take our next quarterly profit distribution, and we're going to reevaluate our allocation percentages to bump them closer to our ultimate goals. Okay? But I've been doing something on my YouTube channel that I've not shared with my podcast audience. And so I'm actually going to do one video today, and I'm going to share it with both my podcast audience and my YouTube audience. So on YouTube, so if you're following me, if you're listening to me on a podcast app, I'll drop a link to the video in YouTube so you can go back and look, because this is I purposely put this in YouTube because it's a visual aspect. So what I've been doing about 2 months ago, I thought, I talk about Profit First, but it's hard to show you Profit First. And so I came up with a spreadsheet that's an over my shoulder look at what's happening in my business in real time with real numbers with Profit First. And the spreadsheet it's not fancy, but I at least do have some graphs that make it a little bit easier to see what's happening in my bank accounts. And so it's week 9 that I've been doing this, and my bank accounts are listed. So I've got a spot where I'm going to place my deposits that went into my income account. And then I have the 5 foundational Profit First accounts, but I have a 6th account. So I've got my profit account. Obviously I have my income account, my profit account, owner's comp, tax, OpEx, but I have a special account for my mastermind. And the reason being is that it's a significant expense for me. And not only is it the membership dues, but my group meets several times a year in person. So I also set aside every week when I do my allocations, I set aside money into my mastermind account that's going to pay for my travel expenses. So my airfare when we meet up, my meals, any entertainment, because we always do at least one activity, and my hotel. So I have 6 accounts. And what I'm going to do is I'm going to run through how this is working. So I'm in week 9 of doing this on YouTube. It's not week 9 of me doing Profit First. I've been doing Profit First for years, but I started this series on YouTube 9 weeks ago, so 2 months ago. But here's how this works. So the spreadsheet is going to do some calculations for me automatically. As soon as I type in my deposit amount from last week, the spreadsheet's going to automatically calculate 4% of my profit, or 4% of that deposit amount goes to my profit account. 47% is going to go to owner's comp. 9% is going to go to my tax account. And let's just take a side note here. In the book, it talks about 15% being set aside for taxes. Now, I am a CPA, and I've done some math off to the side that I converted, and if you talk to a tax accountant, they're probably going to shake their head. But what I did was I took my effective tax rate, and that's kind of a fancy term that just means the percentage of the actual total tax you paid for 1 year divided by your taxable income. So on your 1040, you enter your wages, you enter your business income, however that combination is for you. So if you're an S corp owner, you would have a W-2 from your business. If you're an LLC that reports on Schedule C, you don't have the wage part. But both of, any business is going to have, the LLC or an S corp is going to have business income that's added. But we have standard deductions or itemized deductions that lower your income amount. So when you pay tax, you pay a percentage of your income, right? But what you're paying on is not your total income for the year. It's your adjusted income. It's your income minus your deductions. And I'm simplifying this, okay? Because there's some other things that could potentially be happening here. But basically it's your income minus your deductions. And that number is the number used to multiply out against the tax brackets to determine how much tax you owe, okay? So effectively, you're paying your total tax divided by your taxable income. Now, I did another step, and I did some math to figure out, okay, if that's true, if that rate's true, then how much of my gross income, so forget about my deductions, but how much of my gross income, and the reason I did that is all because of Profit First. Because I need to know when money comes in, that's a gross deposit, like my deposits are my gross income. So I need to know how much of that to allocate to taxes. So when I did that math, it turns out to be 9% for me. Everybody's different. And then my spreadsheet's going to calculate out 33% is going to go to OPEX and 7% is going to go to my mastermind. So essentially what I did is my operating expenses are 40%, but I wanted to make sure that I intentionally set aside money and protect my budget amount for my mastermind. So that's why I split and put my mastermind into a new account at 7% and my OPEX at 33%. So let's go through how this works. So last week, my income was $6,325. So I'm going to type that into my spreadsheet. And if you're watching on YouTube, you'll see that in column F, my allocation column it did the math for me. So it was just the deposit amount multiplied by my percentages. That's it. Okay. So I've allocated that deposit of $6,325. But what else is going on in my business? Now, if you've been following me on my YouTube series, where I've been doing this every week, I've talked about, I only have one check that I write once a month for my office rent. I rent an office. That's the only check I have to write. Every other expense normally in my business, in the all normal course of things that happen in my business, every other expense goes to my credit card. And then at the end of the month, I get my statement and I pay my credit card statement in one payment. Now, randomly, there is going to be times where I make a donation or I pay for an ad. I pay for an ad that I have to write a check. I can't charge it. Okay. Those are not normal. That's not random. Normally, or that is random. Normally, I don't have to write extra checks. I just have one check a month. And then I pay my credit card statement for everything else. And then beyond those two transactions, paying off my credit card statement and my rent check monthly, I run payroll every other week. And so this just happens to be a payroll week. And I have a VA So I pay her hourly, and she's part-time, a couple hours a week, helps me out with stuff. She's amazing. And I've got to pay my salary. So this is payroll week. So the first thing that I had to do was do my allocations. And so you'll see how on my spreadsheet that I started off with my bank balances from last week. And then I've done my allocations. And then I now need to report my payroll. And so my total payroll, and this sometimes gets a little confusing. My total payroll, so me and Rochelle, our money comes out of my OPEX account. So I am going to withdraw the total payroll for both of us, payroll and taxes. So that total is $5,246.17. So you'll see how my OPEX account started off at $35.62. I added instead of subtracted, so got to fix that. So I subtracted the total payroll of $52.46, but I have my allocation this week of $2,087, and that puts my OPEX account down to $403. But here's the next step that I do, and this is where sometimes I lose people, which is part of the reason why I wanted to do this visually as a video, to look over my shoulder to see how I do this. So I did my step where I made the payroll, but hey, I've been setting aside money for my owner's pay in my owner's comp account. So this next step is to transfer money from that account to replenish my OPEX account for the amount of my payroll and taxes. So I'm actually going to subtract off I pay myself, I'm taxed as an S Corp. I am an LLC, but I'm taxed as an S Corp, so I get a W-2 paycheck from my business in addition to distributions. But I pay myself a salary, and the total with taxes, the payroll taxes, is $4,140.38. So I'm going to take that money out of my owner's comp account, and I'm going to add it to my OPEX account. And when I do that, my OPEX account is now $45.43 with 55 cents. And so that's it for my allocations. It takes me longer to talk through them. I bank at Relay. And so I cheat a little bit because Relay does percentage allocations for me. Most banks these days will let you set up recurring transfers between bank accounts, and that's awesome. But I don't know of any other bank that lets you do percentage allocations. Any bank I've ever banked with lets you set up automatic transfers between bank accounts, but on a fixed dollar amount. And that just doesn't work with Profit First. My income's never the same. So with Relay letting me set up percentage transfers, I just have it automatically set up that every Monday morning the transfers happen. What I could do, but I don't, just in case I want to change so I do have a fixed salary for the year, but just in case I want to change it, I don't do an automatic transfer for my owner's comp piece to replenish my OPEX. I do actually run the payroll first and then transfer that money over, just in case I want to change it. So what you see at this point is all the allocations I've done, the transfer that I did between my OPEX or my owner's comp, from my owner's comp into my OPEX account, and I reported my total payroll spend for this week. That's it. That's all that's happened in my bank accounts. But I now know when I go in and I look at my OPEX account, I know that $45.43 is a good amount, because next week I'm going to have to pay my credit card statement and rent. And I'll have one more deposit that comes in that's going to allocate more money there. But what I like about how I've been doing this on YouTube is that I added graphs for my bank accounts because I've been tracking the weekend balances of each account. And what I love about it is you can see how each account has reacted with Profit First. For example, my profit account, build. It's up because I started this 2 months ago, which was a couple weeks into this third quarter. So it's done nothing but go up because I've not pulled any money out. Okay, because that's going to happen in a week and a half, 2 weeks from now, when September ends. So you see the graph of money in my profit account. My profit account has just been going up. My owner's comp, and this, I love this, okay? It goes up because I contributed to it, and then it goes down. And then it goes up, and then it goes down. And it goes up because I contribute and don't pay payroll. And then it goes down the weeks that even though I do contribute, I have paid myself, okay? So owner's comp is just going to go up, down. But I feel good that my balance, I've got money in there that if I have weeks where I have very little money coming in, I still have enough money set aside to pay myself my payroll. And I always have money to pay Rochelle. My tax account, and this is similar, this tax account is going to show you what's going to happen in a couple of weeks with my profit account. So my tax account, same thing. We started a couple weeks into this quarter, so I already had a balance, and it's been up because I didn't have any payments. But while I do have a W-2 paycheck, I don't necessarily have enough being pulled and withheld for taxes out of my paycheck. So I still have to make my estimated quarterly tax payment. So I paid that in early September. And you can see how the tax account went up, and then it dropped because I made a payment. Now it's starting to go back up again. Now my OpEx, this is what we normally see with every business, okay? Up, down. It's erratic. There's no trend here. It just is what it is because I've got bills. So I put money in there when I can or when I do my allocations, but then I've got bills to pay and I pay them. Now my mastermind, the way this account works a little bit differently because of how I do it. So it is an expense for me because remember I said it's my monthly membership dues plus any travel expenses to be able to meet my mastermind in person. But what happens is all of my expenses for my mastermind are on my credit card. So my monthly dues process on my credit card and my travel expenses. So now I'm actually going next week to New Jersey for ProfitCon, and my group's going to meet because my group is related to Profit First. And so I'm actually going to be in New Jersey for a week, and the conference is only a couple of days, and then my mastermind's going to meet after ProfitCon ends. So I already booked my airplane tickets months ago. I booked them, I don't know, maybe in May. So that's already paid for. But that went to my credit card. And I had to put a deposit on the hotel. So some of my travel that's going to happen for next week has already been paid for on my credit card. But what I do is when I get my credit card statement, I go through it and say, oh, that's mastermind. Okay. So just like I did today where I pulled out from my owner's comp account and transferred money to replenish my OpEx account, next week I'll do the same thing. When I get my credit card statement in, I'll go through and circle the couple of things that are on that statement that are for my mastermind, and I'll pull the money out of my mastermind account and I'll add it to replenish my OpEx account. And then I will pay the credit card statement in full from my OpEx account. So that is an overview of Profit First working for me. We're now in week 9 of this overview. Let me know what what your experiences have been with Profit First. and what is working for you, what is not working for you. Let's tweak it. Let's fix it so that it's working for you. And hopefully this insight into my world shows you how you can have better control over your money. Stop letting your money control you. So let me know. I would love to hear your thoughts and feedback on this. Now it's time for our listener's question of the week. And this is a good one from Jake. I have multiple businesses. Do I need to set up the 5 foundational accounts for Profit First for each business? Hi, Jake. Yes, the answer is yes. So for each EIN or tax ID number that you have, you will need to have one QuickBooks file, one tax return, and one set of bank accounts for Profit First, because each of these things are tied to the tax ID number of the business. For example, if you own 3 businesses, you would have 5 accounts for the first business, 5 for the next, and 5 for the last. With each business having its own distinct accounts, you will clearly understand the cash flow of each business. If you share accounts, you're blending the cash flow of the businesses, and it will be impossible to know how each business is performing or what actions to take. So I hope this helps. But if there's more questions or follow-ups, please do not hesitate to reach out. Also, if you have a question that you would like me to answer in a future podcast episode, you can email me at podcast@profitscalethrive.com. Thank you. This week's quote is from Anonymous. Opportunity does not knock. It presents itself when you beat the door down. Final thoughts for today. Reading the book Profit First was transformative for me. It really resonated with me. I had been advising clients to use pieces of it before I even knew that the book existed for years. But I know that is not the same reaction to every reader. And that's why I speak every chance I get about Profit First. I have the hope that if I present it slightly different or explain sections a little more in depth than the book, I can make that transformation happen for another business owner. So I'd like to share an event with you I am speaking at this week about Profit First. It's a virtual event hosted by the small and solo firm section of the Florida Bar. They're hosting a book club where I will be leading the group on the book. I'm so excited to share my thoughts and experiences of the book. The event is not restricted to Florida Bar members only, so if you're interested in attending this free event, it's on Thursday, September 21st, 2023. Please RSVP. I'll leave the link in the show notes. If you have any questions about today's episode, feel free to comment if you're watching on YouTube or send me an email to podcast@profitscalethrive.com. If you know someone who might need to hear this information, please share this episode with them, or if you're on YouTube, tag them below. Be sure to follow and subscribe to get notifications for future episodes. Did you enjoy this episode? Please consider leaving a review. And before I go, remember, profit is something that you intentionally plan for in the beginning. It's not a potential bonus at the end of the year. Thanks and have an amazing day.